and Mortgage Weekly. It's episode 49, and my name is Sam Thompson, and of course, we're always joined with Joe Bladek. Joe, how are you doing today?
Hey Sam, not too bad. Thanks for the introduction. I'm doing pretty good today. Yeah, it's getting a little bit colder out there now that we got late November setting in. We got a good episode today, so really excited about that. How are you today, Sam?
Yeah, I'm doing good. Again, like you're saying, adjusting to the new weather. We've had some pockets of snow lately, so it's definitely. I feel like we're getting close to the season where we actually start to see snow last. It hasn't lasted so far, which is a positive thing in my books, but we're probably getting there soon.
You bet. I know. Yeah, we did get some snow. I know that in our family we like to have like a first snow party, but
Nice.
we've seen already snow a few times, so it's like at this point it was like a third snow party.
Right.
Uh, However, I love seeing snow. Perhaps maybe we could. I don't know. I snowmobiling is not in the cards yet. I don't even have a snowmobile, but
Mhm.
like going building snowmen, that kind of stuff.
Yeah.
I don't know when that's going to happen. Probably sometime in December.
Yeah, that's right. Well,
Yeah,
likely on the cusp of it now.
exactly. But as long as the weather is warm, people are still selling houses, and that's all good as well.
Hmm.
And with that, we have a pretty good episode today. I mean, there's a lot of mortgage news coming out, so I'm hoping that we can share some of that today as everyone's bundling up in this cold weather.
Yeah, we have some great information and some information on entering the housing market, maybe some more creative ways. Some of our 5 tips here have been from some interesting articles that we've seen. But I guess the first thing to note, mortgage news wise, is from an article that we were reading this morning that I think it came out yesterday from the Globe and Mail, just regarding the variable rate that, this Globe and Mail article was predicting we might start to see banks increasing their variable rates ahead of the Bank of Canada schedule. I know, we've been doing coverage on the Bank of Canada rate announcements, so to see this article, it's interesting, and it definitely is something to consider and to think about if banks actually do go ahead of schedule, because I know the Bank of Canada was forecasting spring. I think we had it as April, June area of next year. So it's a good thing to keep an eye out for.
That's right, Sam. Yes, the Bank of Canada did have a target of spring next year, which we covered here on one of our episodes on Canadian Mortgage Weekly a few weeks ago now. And you're right. I did see that article this morning. We were looking it over, and something to really consider because right now the variable discount to the fixed rate is such a big spread, right? It's
Yeah.
the largest difference that we've seen since 2011. And with that, a lot of people have been taking variable rates. We've seen people, about a third of Canadians taking variable rates right now.
Mhm.
With that, such a discount on the variable rate. So, I mean, and we have variable rates, people securing variable rates right now on their purchases and refinances because they think those rates will continue at least until next year. So if that will happen, I think it will really be quite a big shock to the economy, first of all, but also like it might also really help get those people sitting on the fence if they are going to take a mortgage. Maybe they'll jump in now rather than later,
Right.
wait and get the variable rates while they're still low because the discount to the prime is still fairly competitive at this moment.
Mhm.
Anyway, something that is a very good point, Sam, and something that we'll cover on Canadian Mortgage Weekly here to make sure that we get that information out to you. Yeah. But with that, getting to the points about getting into the housing market, that's the main meat of here. One of those things is the fractional ownership model that we've started to see creep up into a lot of social media these days. I know that we have been looking at different organizations, different private companies now advertising these different methods of getting into the housing market. And we're going to cover off a few different methods here today on Canadian Mortgage Weekly on creative ways to get into the housing market. So before we get into that, I just wanted to mention, if anyone has any questions out there, leave a comment below. Maybe send us a private message if you have any questions about these different methods that we talked about here on Canadian Mortgage Weekly. But fractional ownership, I mean, that is a new way, Sam, that we're seeing. And it's not the typical 5% down that the first-time buyers typically need to put down on a home.
Yeah, that's right. It's actually quite an interesting concept when you're thinking that we've seen the term thrown around of forever renters who, don't think they'll be able to get in the market. It has been a tough go for a lot of first-time buyers, even to get that down payment. But yeah, like you're saying, a lot of the programs we've been seeing, I think we've seen a few in Toronto, one out west in BC. And for the home ownership segment of the fractional ownership, yeah, like you're saying, it does require, for many of them, at least the one in Toronto, is only 2.5%, which is half of the minimum down payment required, which, I mean, if you're looking in the Toronto market, it might still be a pretty penny to get that 2.5%. But it also, can really, provide and alleviate some of that burden of trying to get even a 5%, which is difficult for a lot of first-time buyers.
Yeah, it's a really unique model in the sense that, you own a portion of the equity, the private firm owns a portion of the equity. There's different ways that it's structured. So we're not really going to go into all the different structures here on Canadian Mortgage Weekly, but what we wanted to do is just make you all aware of these models available. So if you have any questions, definitely reach out to us. But there's also another model that's coming out, and that's also for investors, right, Sam? And this is where, if you want to invest in rental properties, that you don't necessarily need to put 20% down in this case, or have a rental property. You can actually put in a fixed amount and then see that grow based on the income and the appreciation of the property.
Mm-hmm. Yeah, this is another really cool way, for people to be involved in the housing market. I think that's always the aspect that people see the market, they see that, it appreciates year over year and they want in, but they again might not have the liquid assets. Even if you're saving for a down payment, I know that the programs range from 1,500 to a minimum investment of 2,500.
That's right.
And we know that neither of those are enough for a full down payment. So even if it's a first time buyer that's looking at growing their down payment, there's opportunity available through these programs.
Yeah, exactly. So reach out to us if you're looking for more information on those two specific actual fractional ownership programs, or where you can actually invest a specific amount into an investment and see your investment grow. In addition to that, I mean, I still get a lot of questions. Is 5% down only available to first-time home buyers, and it's not. Everyone can buy a home with 5% down. So that's always a good way to get into the market. Just take a reminder to give everyone that information. But also on top of that, Sam, we've seen a lot of lenders offer cashback mortgages where you put in the 5% down, but you can get maybe 1 or 2 or 3% back from that in cash at closing.
Yeah, absolutely. This is awesome. For the dreaded closing costs that everyone, hopefully is aware of, that they need that additional 1.5% approximately over their down payment. So those closing costs, usually we see a lot of the cash back go towards those closing costs, cover off the lawyer fees, but we've also seen it in, practical ways like moving costs. And even some people save it, and that goes directly as a lump sum payment back on the mortgage, which we know that especially early on in the mortgage, those prepayments really do have quite a big impact. So yeah, they're definitely very exciting opportunities with all those cashback promotions that are available.
Yes, and a lot of them are geared towards first-time home buyers, really, like you're saying, Sam, really helping them offset those initial costs when it comes to buying their home. And then we've even seen sometimes where two first-time home buyers, maybe they wanted to pay off a small credit card or a small loan, they've even taken that cash back at closing and paid off that account, which helps them with the cash flow going forward. So there's endless possibilities with different mortgage products available through our office, where we can really tailor a solution that meets your needs with whatever you're looking for. And another great option to get in the market today would be adding a temporary cosigner to your mortgage. You know, we've seen a lot of these creep up in the last few years, Sam, where we have a husband and wife, they both make good income, or couple, or whoever it is, and they just can't qualify for a home. So we do need to sometimes add an uncle or parent or whoever it is, or even a friend, just to get them into the market. And then once they're in the market, maybe 2 or 3 years, we can actually remove that cosigner midterm and keep that same fixed rate, so the client can benefit for the rate lock and also benefit from, you know, removing that cosigner down the road. And we've seen a lot of that in our first-time homebuyer applications, which you I've seen a lot with as well, haven't you, Sam?
Yeah, definitely. Temporary cosigners have been on the rise, and it's becoming much more common. Just adding, you know, even as the example we use a lot, even a fixed income, if you have a parent who is on, you know, CPP or fixed pension income, a lot of the times that's enough to help boost, you know, prospective, you know, new first-time buyers, to help them get in the market. And that's not the only spot, you know, that's not where it ends necessarily for parents helping out. As another option is gifted down payment. As you're saying, you know, the minimum to get into the market is 5%, but sometimes it does help you qualify for more. It can give you a bit of a, you know, competitive edge if you have that additional gifted down payment from your parents, or a family member, or even, again, if you can't quite make that 5% mark. It sounds so small, but it's really not in reality. So having a parent that can help you reach that 5% mark and get in the market now is also quite common, and a great way to get into the market.
Yes, definitely a great way. And we've seen that gifted down payment, you know, come in various forms, actually. If I can just take a moment to expand on that, where we've seen quite often it's a cash gift, where the parent provides a cash gift for the down payment, but sometimes we've seen where the parent actually provides a gifted equity portion. So say if the parent is selling their home or one of their rental homes to their kids, they can actually gift the equity of the down payment back to the kids, and the kids can then use that on paper to obtain the mortgage. And that's something that is very you know, unique to every situation. So I advise that if you're looking to buy a property from a family member, you can give us a call. We can walk through those gifted equity steps for you. Another option, and this is kind of a funny option that we found, Sam, and that we were looking at together, is, you know, there are some really cool alternatives available out there. And one is in Milton, we've seen this $45,000 tiny home, which is inside an old train caboose from 1912. And that's a really, really great price point, because I'm sure that, you know, 45,000 is about a tenth of the price of what we're seeing for the minimum price of any home these days. You know, and tiny homes are on the rise, so you never know, it could go up in value over the next few years. But it's an interesting living arrangement. So this caboose, it's in Milton. I'm not really sure what it would be like to live in a place like that, but something else to consider to get into the market today.
That's right. If you're somebody who is a minimalist, you know, a lot of tiny homes I find are very like eco-friendly driven as well. So if you're somebody with a green thumb, or, you know, who is, you know, green friendly, a lot of tiny homes are equipped with those needs. And I think the article was referencing that it's even cheaper than most parking spots in Toronto. So, you know what, again, that price tag of 4,500, or sorry, 45,000 is maybe appealing enough. I don't know if I'd go for it, but there is alternative housing options if you're somebody who is desperate to get into the market.
Absolutely. And if anyone's looking to find out about this caboose, it's you can check it out on blogto.com. And there's an article there all about it, and you can take a look at the listing. But with that, those are some creative ways to get into the market. Some of the main ways that Sam and I and Terry Lynn see on a daily basis that we wanted to share with all of you. So if you have any questions about these ways, or maybe you've been thinking about getting into the market and want to see if we can come up with a creative way for you to enter the market, give us a call or send us a message, or just ask a question right here on social media and leave a comment below. And with that, I just wanted to take a moment and introduce our co-host here, Sam Thompson. He is a mortgage agent with Mega Mortgage. He's been with Mega Mortgage now for over a year and 3/4 now. He's originally actually from Ottawa, Ontario, and moved to Barrie in 2020. So Sam, welcome to the show, and great to have you on today.
Yeah, thanks for having me on today's episode. I think we covered a lot of really awesome information. And again, right back at you. For anyone who doesn't know, Joe Bladek's a mortgage broker in the Barrie Simcoe area, but serving all of Ontario. Joe has been in the industry for over 10 years and lives in Aurelia with his wife and 2 kids. So a ton of information, and definitely a family man. If you want the personal touch and approach, Joe's definitely the guy to help you out. So thanks so much for having me on today's episode, Joe. It was fun to be on with you today.
Oh yeah, absolutely. Same with you, Sam. And we'd like to take a moment and introduce our 50th episode coming up next week. We are so excited about this because it's a big milestone for Canadian Mortgage Weekly for 2021. We are planning to have a special type of episode for you all. What that means, we have yet to find out because it's still in the final stages of planning, but we'll have something special lined up for you all next week. And with that, last week we did take a break for Remembrance Day. Just wanted to take a moment and recognize Remembrance Day. We ended up taking a break for our regularly scheduled programming, but we'll be back next week with episode 50 here on Canadian Mortgage Weekly, Canada's video mortgage and news podcast. And with that, thanks, Sam, and we'll hope you have a